The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the May 7th, wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Tuesday, maybe even in honor of Roger Bannister's 60-year anniversary of breaking that 4-minute mile. Perhaps some of you broke through your own hurdles in life, and, now it's time for Wonderful Wednesday. And I believe the best way to start our day is to have clear outcomes, and my outcome each morning is to teach you how to master the tools for trading. That includes the tools of the mind, because when we master the tools of the mind, we become strategists. You see, trading and investing, much like life, is all about strategy. And for the next couple hours, we'll look at A to B equals CD patterns. We'll look at swing points, Gartley buy, Gartley sell patterns. We'll use these tactics. We'll use more, and we'll use these to project price, because every game plan needs tactics. But here's the things. Tactics without strategy, that's a recipe for failure. And failure, it's not an option in my playbook. I hope it's not an option in yours as well. So instead, let's think like a strategist, because strategists, they slay the tactician all day long. And the foundation of any strategy, it's a strong mind. So let's go look at one of our tools, the tool that I call the dynamics of growth and change. The only way life gets better for us is when we get better at life. And better is not something we wish for. Better is something we become. So here's our choice. Either 1, become part of what we could be. 2, do enough to get by. Or 3, become all that we can be. My choice, and I think your choice as well, is to become all that we can be. And in the end, when the record book that each of us create is finished, let it show our wins and losses, but let's not let it show that we didn't try, that we didn't take action. I say massive action, and that we didn't take action. I know I said that once, but I think it's worth saying again. So here's what we must remember, that no matter how much we prepare for one turn of fate, something will sneak up when we're least expecting it. As Inspector Clouseau, Peter Sellers in the movie The Pink Panther, used to say, when you least expect it, expect it. In fact, this is the key to trading the markets. It's one of the reasons we use stops. It's the reason we look at both sides of the trade, and it's the reason to take massive action, because when that time comes, the time of when we least expect it, we will triumph because we're ready to adapt. You see, the dynamics of growth and change are all about being able to adapt, and that's how we become all that we can be. It's not in the years in your life that counts. It's in the life in your years. And when everything seems to be going against you, remember this. The airplane takes off against the wind, not with it. So go out, build your own dreams, or someone else will hire you to build theirs. It is Wonderful Wednesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off here. Right now, we've got Dow futures trading up 43 points. They're trading out at 16,403. S&P futures up 3, trading at 1867. NASDAQ futures up 7, trading out at 35.58. Russell 2000 up about 2 points, trading at 11.07 and some change. King dollar up 7 cents right now. It's trading at 79.20. Somewhat quiet in the currency market. Well, maybe with the exception of the euro, Japanese yen. We'll go check in on that. Goldilocks right now back $6, trading out at 13.02. Silver down 13 cents, trading at 19.51. Light sweet crude up 83 cents, trading out at 100.33. Our call number is 877-927-6648. Feel free to give me a call. Happy to take a look at your stock chart. A quick peek around the globe. Let's see what we have going on over in Germany right now. The DAX is up 30 points, 0.3%. FTSE down 16, 0.25% out there. Boy, over in Asia last night, a sea of red across the board, at least in the 3 primary indexes that we follow here. The Nikkei down 424 points. Sounds like a lot, isn't it? Well, it was. It was almost 3%. The Hang Seng down 230 points. Also sounds like a lot. That was down 1%. And the Shanghai off 19 points. Also 0.9% out there. So where do we begin our day? I say we begin our day by taking a look at the rising price channel here inside the NASDAQ futures. Because what took place yesterday was price came back and they tested the bottom of the rising price channel. That's a 120-minute chart that we're looking at. This is the June contract. And if you go back to the time period, I'll pull this chart pattern here back a bit. You can see the red descending price channel. That price had been traveling in. The futures contract finally broke through that level right around the time frame of about 4 o'clock in the afternoon on April the 21st out there. We're at May 7th right now. So April the 21st breaks out of that descending price channel, forms a new price channel out here, the rising price channel, anchors a point. So that makes us, we go back, we take a look at the largest number of co-located opens and closes. That sends us back to the time frame of 4 o'clock in the afternoon on April the 15th. Out here, you can see if we take a look at where the bottom of that price channel, it formed again. Our next touch points right around the April 28th time frame at about 2 o'clock in the afternoon. And price yesterday, at the time period of 4 p.m. coming into the close, price stopped where? Right at the bottom of that rising price channel. Now, in overnight action, especially with the damage that we saw overseas in Asia early in the morning here in Europe as well, we saw the NASDAQ futures break through that rising price channel. So the real question is that a real break or not? And I don't know the answer to that. What we do know is that when price breaks through a rising price channel or a descending price channel, in this case here it's the rising price channel, price often is going to come back and is going to test that area. And it's going to try to get back in good standing and become part of that trend. And that's what we saw take place so far during this the 2-hour session that we're in right now, which ends at 10 o'clock. So it's 9:15 right now. We'll have a pretty good feel by the 10 a.m. time frame here if, in fact, this was a real break to the downside. I mean, it really isn't any more complex than that out there. What we saw take place here, coming in the time frame of 8 o'clock, and we saw that taking place really up until, about 8:30, quarter to 9 o'clock or so. I was away from the computer. What we did was we saw price actually get back inside the trend. So we know that it's trying to get back in there. Right now, you got price inside the NASDAQ futures trading out of 35.55 out here. So it is right along the bottom of that trend line. What happens if price gets inside the channel? Well, if it gets back inside the channel, you can say that the bullish outcome is what should be expected, that the rising price channel, in essence, is still intact out here. So that's what's going on in what is considered to be the weak link in the market, or one of the weak links in the market. Of course, the weakest link really is the Russell 2000. That is just a simple mess out there. If we go take a look at let's go take a look at the Russell 2000. Do I have that here? Yeah. Let's take a look at the Russell 2000. Now, again, this is delayed by about 10 minutes here, but this 10-minute delay, you can see it has not broken through its descending price channel where the NASDAQ has, the Russell 2000 has. And here, in a time period right back here at about April 22nd, right around 2:30 in the afternoon, we saw price try to pierce and break through that rising price channel, got back inside it. It tried to pierce it again at about 5:30 in the evening. April 23rd, got back inside it, continued lower. It even tried again back here at about 11:30 or so in the morning on May the 2nd, but no, it just simply, it is struggling. It is really struggling to try to break its trend. Its trend is very clearly to the downside as we speak. That is inside the Russell 2000, whereas the NASDAQ is saying, hey, not so fast out there. Now, what else was trying to break through a rising trend line out here? In this case, it was the Euro-Japanese. And I'll switch over and take a look at the daily chart out here. Remember, the body of a candle is truly the essence of price out here. Here is the daily chart for the Euro-Japanese yen. You can see the rising wedge pattern that is being formed out here. That's coming off of a trend line from the lows here on November the 7th. That price point being 131.20. The next touch point out here on February 4th being 136.22 out there. That's the red diagonal line going across my screen. Take a look at the bodies of these candles out here. Really ever since to a certain extent, quite frankly, since the time frame of April 18th. April 18th, we're at May 7th, almost for a month. We've had nothing but short-bodied candles with one exception. That happened to be the trading session of April 28th. Otherwise, just a very narrow-banded move inside the Euro-Japanese yen. So, hence, really the choppy market that we have here, because the currency pair, the real liquidity gauge out here, has done virtually nothing. It's really one of the reasons why we're seeing such a whipsaw effect in the market. Of course, intra-session here, you can see how price pierced through the trend line out here. Of course, we've seen that take place on a couple of occasions back on April 28th, back on April 30th. Back on May 5th, yesterday, and as well as today. You can see the body of the price is truly the essence of what is going on inside the marketplace. Price is now back above that. The upside potential, well, it's going to run into resistance right around the 142.11 area out here. But nonetheless, it can still move a bit higher. That ought to put in some fuel in our markets here to move higher as well. That's what's going on inside that currency pair. If we take a look at the VIX index yesterday, VIX index moving higher, but still really a inside day. Traveling inside the prior day's candle, still below the 50-day exponential moving average. Right now, we've got the Dow futures. They're up 36 points. ES Mini up about 2. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Thanks for joining us this morning. You know, the real question, I guess I know the answer, but the question, what is it that brings us together? What is it that is one of the reasons that you join the show each morning? I have to say it's probably one of three things out here, or really, what's our role when it comes to trading, and investing? And it really boils down to what? Three possible things out there. We're either trading breakouts, right? We're trading breakouts from a consolidation. As you know, we take a look at consolidation patterns. Just as an example here, let me switch back. I have the chart of Google. I'm going to come back to Google. We've got a request in the Tiger's Den to take a look at Google. But when I take a look at what is it that brings us all together, what our real outcomes are, what our real objectives are to trade breakouts, right, from a consolidation pattern. Sometimes they're referred to as a base. Sometimes they're referred to as maybe like a congestion area. I like to just simply, they're consolidating. It's a pattern that's moving sideways. An example of an existing consolidation right now is clearly inside the Dow futures. It's about where does this go from about 15,900 up to 16,500. So you got a nice 600-point consolidation. If, in fact, the Dow futures ever break this pattern to the top side here, you're looking at a 600-point consolidation break. This would be trading a breakout out here. Likewise, it has not been able to break through that area, and so then we have to respect that it couldn't bust it up, and that means that we always have to pay homage to the mere fact that it can try to bust them down. That means the Dow futures could come down in the 15,900 area out here, when you're inside a consolidation pattern. Sometimes the easiest way to play the consolidation is either break topside or break downside out there. But there's nothing wrong than trying to play both sides of the trade. It becomes relatively easy because your stop, in essence, is on the other side of the consolidation box. So that's that's one of the patterns that we should each be looking at. We should also be taking a look at what? The trading retracements of anything that would be inside of a trend out there. And in that case there, we would either use Fibonacci levels or wide price spreads, accelerated volume. Really, that takes me now back to the chart here for Google out here, because if you're trying to go ahead and take a look at retracements or things coming back into a breakout area where you see wide price spread and accelerated volume, well, it would be one reason to be taking a look at Google. But then, of course, you've got that third element. And that third element is really trying to identify an exhaustion area. Where has price simply stalled? Because what you're trying to do is identify where you've seen a change in trend. And how do we do that? We do that by using Fibonacci expansions of swing points. We do that by using A to B equals CD patterns. We do that by becoming an expert, a master of buying and selling the D point. That is that C to D leg out there. We do that by trying to identify price relative strength divergent patterns. Maybe we use the Chapman wave, a wave counter, a DEF or a rogue wave G that's out there. We look for confirmations of any of those patterns by doing what? By using Japanese candlestick reversals out here. Now, in the case, so there's one of those three outcomes. That's really one of our three outcomes from a trading standpoint out here. Now, if we take a look at Google happens to have within it one of the most unique patterns, very much like the Qs. I've shared with you with regard to the Qs. The Qs make lows with high volume. They've done it for years out there. It is totally opposite of anything that we have learned about volume out here. When you see high volume lows, they typically become magnets for where price will travel to. But not so fast. The exception to that rule happens to be inside the Qs. Go back, study the chart of the Qs out there. I can't tell you the reason why it works. I just know that it works. And when you see those high volume lows out there, they often become reversal points. Now, that is a unique characteristic inside the Qs. Inside of Google, it happens to have a unique characteristic as well, and its unique characteristic comes on earnings day or the day after earnings. And that oftentimes, you go back and you go ahead and you identify the earnings dates inside Google, they will identify where price, the direction where price is going to head to, and usually it's for some period of time out here. Just take a look at Google's earnings back on October 17th out here. You can see price gapped up, and it did what? It just continued to move higher. If we take a look at different A to B equals CD patterns or expansions of swing points, they're all over the place. I'm not going to draw those in here right now, but it's set up a nice low. In fact, it was wide price spread, accelerated volume, 11 million shares on that trading session. Now what we see is Google coming back into that area. Here's where we've got kind of an opposing viewpoint. We're going to have to, I had to give that opening there just to kind of put things in perspective. What we have going on right now with Google is what? Earnings on April 16th, price has been traveling lower. Something to think about. We'll take a look at Google when we get back from this break after the market opens. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 79 points, trading out at 16,480. S&P up 8, trading at 1875. Composite up 9 points, trading out at 4,090. Russell 2,000, slow out of the gate, up 2 points, trading out at 1110. Apple on the move again this morning, up $2.58. Microsoft up 15 cents, leading the charge, the upside. Pioneer Natural Resources, PXD is a ticker symbol. They're up at $10 and change, up to 5% out here this morning. Looks like out with numbers, first quarter revenues, $963 million versus $767 from the prior year, so nice beat there on the top line and being rewarded this morning. EA, Electronic Arts, up 17%, up about $5 right now. Their fourth quarter profit rising out here. There, let me see if I can find the revenue. Well, revenues look like $1.2 billion. I don't see what it was compared to. My apologies there. Aris Group Inc., ARRS is a ticker symbol. They're up 17% here. No, they're up 16% this morning, up $4 and change. We've got Cimerix, XEC is a ticker symbol there. I'm sure I butchered the name. Cimerix Energy. They're up 12%. That's up $15 right now. They generated revenues $599 million versus $426. Nice beat there. Net income $138 million versus $89. Boy, nice beat there on both top and bottom line. TripAdvisor, TRIP up 5% this morning, up $3 and change. Net income of looks like $68 million, which is up 10% year over year. That was the net income for the first quarter. Revenues were up 22% out there, so they're having a nice morning. Caesars Entertainment, CZR, up 18%, up $3 and change right now. Siemens SI up 2%. Mondelez up 8% this morning. MDLZ is a ticker symbol out there. Tesla ahead of earnings is up about 1%, up $2 and change. To the downside, Zulily. I think that's the name. ZU is the ticker symbol. Yeeks. Down 22% here this morning. They generated net sale. Wow. They killed the net sales number. $237 million versus $127 from a year ago. Nearly a double when it comes to their top line. Let me see if I can find their bottom line number out here. What do they do? Is it their bottom line or is it their guidance out here? But, man, they really killed the top line. I don't see the bottom line numbers, but they're getting hammered this morning. We'll go take a look at that stock chart a little bit later. We got Perrigo Company, PRGO is the ticker symbol. They're down 7%. Whole Foods Market down 19% off $9 this morning. Also on earnings release yesterday. Fire E, I'm not sure which one it is, FEYE. It is off 21%. Boy, there are a couple big decliners here today. Trimble Navigation, navigating south. It's down 13% off $5. Amazon down $4. AOL off 11% this morning. GNC Holdings down 11%. As well. So we'll take a look at some of those stock charts. I want to go back and help out our man Russ in the Tiger's Den. He's taking a look at Google. We're looking at Google on a couple different time frames. So first, I'm showing you a characteristic that is, I mean, it's a very tradable characteristic with inside Google. Just set your calendar to the earnings date. Take a look at how the market responds to earnings, either that exists that day or the day after, and it typically goes ahead and creates a fairly decent trend for a period of time. Now, what you got to do is you've got to use other tools to try to identify, okay, where's price going to move to from a support standpoint, if things are moving down, resistance standpoints, if things are moving up, completed patterns and things of that sort. But go back there. Go do the work on that one. That's a huge gift from Stevie Son to you out there. It is the best stock chart with regard to earnings and the way that it behaves, and you could make a small fortune, I'm sure, just Google using, just being patient and waiting for that. Now, what do we know about Google here, obviously, after the stock split? Well, number one, wide price spread on the daily chart. That's what we're looking at. The change of trend has clearly taken place. You had a confirmation of that change in trend back on March 21st. So that was before the actual earnings date took place out here. Nonetheless, what price has done is come back and has tested a very wide price spread, a very accelerated volume. That was on that earnings release back on October 17th. That had 11 million shares adjusted now for the stock split, so you had 11 million shares to the upside, and price came back and it tested the top of that area. It didn't test the bottom of the gap, which is in essence the low of the trading session from October 18th, 487. Even Steven out there. But price came back and it tested that level here with light volume on April 28th. That was 3 million shares going against 11 million shares. But from a lagging indicator standpoint, it still remains in a downtrend out here. And really, very good chance that your best potential buy on this is going to come. First, you'd like to really see what happens as it tests the bottom of the gap. That's the October 18th low, 487. Of course, ideally, it would come all the way back to the breakout area, which is back into the October 17-ish type time frame, right around the 442.80. That's what the daily chart shows us. Let's go take a look at a weekly chart. Now, on the weekly chart during the break, one of the tools that I've built here inside of the Ensign Windows software is a tool that automatically goes out and identifies the primary trading range boundary line. So it works in all different time frames out here. Those are the horizontal lines going across my screen. So adjusted for the stock split, the price where the largest number of, in essence, co-located opens and closes takes place is right around the 265 area. 263.48 is the exact number that shows up on my screen, but it's really more used as a guideline out there. That's the dark line towards the bottom of my screen, if you're able to legibly read my screen out here. Now, what we know on the weekly chart is the trend has also changed from a lagging indicator standpoint. Of course, you got a nice bearish reversal signal here the week of March the 14th out there. That was we did have a bit of a bearish reversal signal back here on January 24th. The very following week, though, no follow-through. Well, that wasn't really the case that took place here back in March when you got that reversal signal. You had a little pause button on March 21st, but then it gapped down the week of March 28th. That was your confirmation of really a reversal signal inside of Google. Now, when you take a look at these horizontal areas, these horizontal primary trading range boundary lines, typically price travels up. When it breaks through one area, it comes back and tests it just to confirm that it's a real breakout. Well, here's the deal. On the week of October 18th, that wide price spread accelerated volume week out there, price just simply cruised higher. And it never came back to test out any of these primary trading range boundary lines out here. So it really looks more like about the 450 area. And if it get to 450, you know what I would be setting my sights on? I'd say just be patient out here, because 432.70, the bottom of that breakaway on October 18th, if it can move back there, do it on lighter volume, that, Russ, may be the area where you'd be looking for that longer-term, intermediate-term trade out here. At a minimum, since it's an intermediate-term time frame that you're looking at, you really want to be able to see some type of reversal signal on a weekly basis. And you have not seen that here. Even last week's candle, that was not a reversal candle. This week, you're most certainly not getting that. So wait until you get some type of signal, at least showing you where the bulls are defending their position. And at this stage, if you take a look at the weekly chart, that's going to take you back into that October 18th level. So what you're really watching for is what happens at the price level of 507.73 out here. You're at 512.27. If, in fact, Google were to close inside 507.73, whether it's this week, next week, whenever it is, that gives you a pretty good indication that it ought to travel all the way back down to the low. So I hope that helps you out in taking a look at Google. Again, you know, what a key thing for each of us to do is always to be taking a look at what are the market conditions, right? We talked about the importance of, you know, we're trading breakouts, whether it's breakouts or breakdowns from consolidations. bases where they're formed. We're taking a look at retracements, either retracements up or retracements down, depending on which direction it is that you are trading. You're looking for exhaustions in the marketplace, and you're looking for signals. And the whole key to all that is what? It's to understand what's going on from the trend standpoint. Is the trend in a consolidation? Is the trend in a longer-term trend moving higher or moving lower, or in a short term? So when you're taking a look at buying anything or selling anything, make sure you look up above you, make sure you look down below you, just to understand what's going on inside each of the trends. That's why when we take a look at the euro U.S. dollar, I got some emails saying, how could I trash the king? How could I trash? It wasn't really me trashing it. It's really the stock price, the stock charts out here. Folks saying, wait a minute here, we're slowing down the printing of money. How is it that the U.S. dollar index is getting weaker? Remember, it's an index. That's the key. It's an index, and it's an index of 6 currency pairs out there. That means you need to, in order to really trade the U.S. dollar index or any of the ETFs associated with it, you really have to take a look at what's going on with regard to that weighted structure. It's like trading the Qs. You need to know what's going on inside the top 10 holdings there, because that's going to, just simply because of the weighted nature of that index. Well, inside the U.S. dollar index, that means you need to really know what's going on inside the euro. And as we took a look at on all time frames, whether it's daily, whether it's a weekly. If you're looking at my screen right now, upper left-hand corner is the monthly chart. Monthly chart shows a clear breakout of a long-term descending price channel. Which has been, in essence, has been tested. So it's got confirmation that it wants to move up to the 144 level out there. If the euro, in fact, makes that move, that's going to put pressure on the U.S. dollar index. There is no other choice in the matter. It's a breakout on the weekly basis. It's a breakout on the daily basis. So all that the euro needs to do to really start moving up towards that 144 level is it really needs to break through its last area of resistance, which is only from the end of the month of March 31st, and that's at that 1.3965 level. You're at 1.3927 area. Could find resistance there, could pull back or what have you, but until price gets sending price channel, one has to assume that the euro has broken out to the upside. And what does that mean? That means it's going to put pressure on the U.S. dollar index. And as we looked at yesterday, one of the other currency pairs from a weighting structure standpoint is the Great British Pound. That, too, has broken out topside on an intermediate term time frame, so on a longer term time frame. So we've seen a real change in trend. That's because it was traveling inside a consolidation pattern. It only has resistance up at about the 170 level. Once it gets up there, 180 is in store for the Great British Pound. Really, 182 is more likely what's in store for the Great British Pound U.S. dollar. If we go take a look at Goldilocks, let's take a look at some of the commodities out here, see what they're doing. We take a look at gold. Now, here's a chart. This is actually the GDX. So the red line on my chart out here, this happens to be gold, and so when you're trading any of the mining equities, when you're if you are trading the mining equities, what you want to know is you want to see what's going on inside gold, because just take a look at that correlation out there. I mean, that correlation, it's every now and then the tango gets a little bit off, but not for too long a period of time out here. So right now you've got gold moving down, you've got the GDX, the basket of currencies for the mining equities out there, also moving a bit lower out here. Now let's go take a look at, you can see that it, though, broke through its trend line, the GDX that is, and it broke through its shorter-term downtrend line, and it did that on the trading session of April the 25th out here. If we take a look at gold, we know gold broke through its trend line as well. Let's take a look at this. Broke through the trend line on the trading session of May 2nd. Any pullback, a significant level of support ends up being what? Ends up being the April 1st swing point. And why is that? Because that is where that's where the bulls are hanging out. Every time price gets down to that 1277 area, that doesn't mean intraday that it can't spike lower, but every time price gets down into that area, the bulls show up to defend that price level. And that means it's very important, because any close below 1277.40, that will go ahead and set up an A to B equals CD to the downside out here. That A to B equals C to the downside would take you to about the 1216 area. But that's not what we've got. The battle that is being fought is certainly the battle for the support area. If we just take a look at retracements as we speak here right now, that means retracements just simply over the last couple of days, coming off of the low from May the 2nd to the high that was put put in here on May the 5th? Well, your 0.382 retracement level, 12.99. Intercession so far today, 13.01. If we were to see this 12.99, 13.01 level hold, well, that could actually set up an A to B equals CD to the upside. The B point now of that pattern would be the high here from May the 5th out at 13.1580. Does that mean that gold holds the 12.99 level? No. Could easily pull back to what? 12.88. It could easily pull back to test that trend line out here, which would be in that between 12.81 to 12.88 mark out here. That's what's going on inside of Goldilocks. If we take a look at silver, see what's happening in high-ho silver out here. Silver, certainly more bearish than gold is. In fact, this has a longer-term descending price channel. That's the red diagonal lines, the two diagonal parallel lines on my screen out here. And silver, this is a daily chart, yet to break through that level. Now, nothing enthuses me about a break of a descending price channel, a trend line, by moving sideways. And right now, that's what we've got going on inside silver. It did break through its shorter-term trend line. I probably ought to change that to a different color. Let's just change that to blue out here. We'll do that. Right now, we've got the Dow trading up 71 points, S&P up 6, NASDAQ Composite down 5. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The battle between the Bulls and the Bears rages on. You've got the Dow up 48, S&P up 3. We're back to the fight between the S&P and Dow versus the Nasdaq and the Russell 2000. Nasdaq Composite off 16 points right now, down 0.4%. The Russell 2000 down 3. When we began the show, we were taking a look at that rising price channel inside of the Nasdaq. What is occurring here as we go into this 10 o'clock session? We've got 6 minutes to go. We can see that price has failed to get back inside that rising price channel out here. If we take a look at just normal retracements now, coming from the most recent swing point low, 2 o'clock in the afternoon, down at a price level of 34.80 up to the high so far that we've seen out here, that taking place at 12 noon on May the 1st, on May Day out there, that price level 36.05. Looks like the NASDAQ Composite ought to move down to about the 35.28 level. You're at 35.35 right now, so that gives you, about another 7 points or so at a minimum. That would be your 0.618 area. No real A to B equals CD pattern to speak of to the downside that I guess you've got a larger one that you could draw. I was looking really to see, is there any kind of Gartley buy pattern that might be setting up inside here coming off of that swing point from the 2 o'clock time frame. There's not. The only A to B equals CD down pattern inside of the NASDAQ. You'd have to start here at 10 o'clock in the morning. That's on the trading session of April 24th out at 36.1825. So that high down to the low that was put in here at 2 o'clock in the afternoon on April 28th down at the 34.80 mark, and then all the way back up to where it formed a C point. That one-to-one takes you all the way down about the 34.67 mark out there. Now, in the way of the bears inside the NASDAQ and the Russell 2000, most certainly is the Euro-Japanese yen. It has its own trend line that it tried to break through. It formed a little 3 drive to a bottom pattern out here. Price now getting back to where it should at a minimum, which is back inside that swing point up here from the 9 o'clock a.m. time frame on May the 2nd out here. So at this stage, price is back inside its rising trend line. That could send price all the way back up to the top of the descending trend line around the 142 area. And if we do that, plenty of liquidity inside the market. A quick I'll get that out. A quick check on the VIX index out here. It's not really doing much other than the fact that it is still below the 50-day exponential moving average, traveling sideways to just slightly lower out here. 50-day exponential moving average of 14.23. Real damage is done in the markets if, in fact, the VIX can close above 14.23. Inside the New York Stock Exchange, yesterday the bears did take control. They were able to push the price oscillators, the volume oscillators down below the zero line out there. However, today, right now, New York Stock Exchange trading up just slightly, up 19 points. That's about 0.2% out there. We've got net advancing issues of 304. So the bears do have control. We'll see what they can do with the markets out here. Let me see if I've got it handy. Just pull up another chart here. What would be needed for a failure for the bears today? And it would be a big failure if this occurs. If we were to see net advancing issues above 10.1055 today. 1055. That is the number. That would be the fish hook inside of the inside of the New York Stock Exchange, I should say. If you see that, that would be a failure of the Bears to really be able to do anything with these markets. Folks, it is Wonderful Wednesday. As always, thanks so much for joining us. If you're off to start your day, have a terrific day, and, stay tuned. If you have some time, I'll be doing the Money Masters show here in about 8 minutes or so. So have a great Wednesday, folks. As always, thanks for joining us. Take care. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.